They are lying about inflation in the United States, and they should be ashamed of themselves. The Biden administration going on national television, doing interviews, basically lying to the American people about what you guys are experiencing right now. They think you are stupid. I want you to watch this amazing clip. This absolutely pissed me off and floored me. I don't know how many metaphors I could use to describe this, but my jaw hit the floor when I was watching this exchange with Neil Cavuto, my old colleague over at the Fox News channel, interviewing one of Biden's top economic advisors, Jared Bernstein. I want you to watch his questioning on inflation. Watch.
Was it 9% when you assumed office? It was 1.4%. It got as high as 9% in 2022. You brought it down from that, but it was never, ever, ever 9% when you came into office. So why does he keep saying it?
Well, first of all, let me point out that in that very quote you played, the president talked about how concerned he was for households struggling with prices that he consistently characterizes as too high.
That's not what I asked you.
So
why does he keep misrepresenting this?
He's making the point that the factors that caused inflation to climb to 9% were in place when he took office.
No, that's not what he said. He said it was at 9%. It would eventually get to 9% a little over a year after that. But the fact of the matter is it wasn't 9%. So if I can't trust him quoting data in real time, why should I believe what he's talking about now?
So the annual growth in core inflation in the second quarter of 21 was, in fact, about 9%. And his point about inflation down 60% off its peak is very much the case. So
no,
look,
it wasn't. It was not at that. So you're almost as bad as he is. Why can't you just say it was high? It got as high as 9%. You'd be accurate in saying that. And we have now brought it down, and we're struggling in around the 3% area. But it's better than it was. But instead, to hang it on his predecessor, that you inherited something that was through the roof when we were in the middle of COVID. It just seems to the American people, whether you're Republican or Democrat, you're lying. Neil. You're just lying.
Well, hold on. I hear you. The president was making the point that I think is unequivocally true. The factors that took inflation to 9% were in place when he took office.
That is not what he said, Jared. And you're a very smart guy with this stuff. You could just whisper. He's a good friend of yours, obviously, thinks the world of you. Many others do as well. You could have just told him, Chief, I got to tell you, Mr. President, whatever you say, you might even, in fact, call him Joe. That's how close you are. Say, sir, it was not 9%. Stop it with the 9%, because the more you say that, the more people don't believe what you're saying.
Look, I think what the American people care most about is the fact
truth.
that inflation.
The American people care about truth, Jared.
Hold on, Neil. Neil, this only works if you let me talk, okay?
You haven't answered my question. I've asked it 5 times, five ways.
The president was making the point that the factors that caused inflation were in place when he took office, and that's unequivocally true.
Right.
I take your point, and we can have we can go on all day back and forth on this.
Yeah. You are just as bad as your boss. You are just as bad as President Biden lying to the American people. And so I really thought long and hard about this clip because it's almost a tale of two realities, right? Like what Neil Cavuto is looking at, actual numbers, and what he is saying in response to it is a fantasy land. It's total propaganda. They want you to believe something that they've created, something that they've made up. And I was talking to an economist friend of mine about this because I sent him this clip and we were talking about it. And very, very smart man, and a multimillionaire investor as well. And he said we had a kind of similar back and forth anger about this. Like, can you believe this? And one of his points, and I thought it was really spot on. He's like, it's like they have a contempt for the United States. And I said, yes, exactly. They hate the United States. They hate our country. They hate what it stands for. This is why they're trying to tear it down. The only reason can you imagine lying to your own people? That's exactly what they're doing. They are lying to their own people. Just put yourself in the head of having children. Would you lie to your children like this? Something you know is a total lie, is a total sham, but you're doing it for propaganda reasons. Would you do that to your own family? If you do, then you got to get yourself checked out. I mean, truth will set you free, right? This is astonishing. They are lying to us about inflation right now. We know that the cost of everything in the United States has gone up. The cost of living has gone up. Rental prices continue to go up. The cost of meat, the cost of eggs, the cost of fruit, all of it gone up, up, up. The cost of energy going up. So these inflation numbers that he's living in are a total fantasy land, and they should be totally ashamed of themselves. I'd love to hear your thoughts on this in the comments below. We'll get back to the video in a second, but look, your money is not safe. You can see all the time that stocks can crash, bonds lose value. Anything that you can't physically put your hands on increases your risk right now. Hey everyone, I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. And my favorite tangible asset is real estate. It consistently outperforms other asset classes. And I believe it's the #1 way to build and protect your wealth. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build to rent model offers the most benefits. More specifically, single family buy and hold rentals. Here's why. Much lower risk than trying to flip a house. You have more control and higher returns than REITs. If you're investing in the stock market, it's way less work than wholesaling properties if you're into wholesaling. Many fewer repairs and headaches than trying to rehab a property. My company, Morris Invest, along with the help from our partner at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. That's because we buy and build in bulk, and then we pass on our savings to you. And when you purchase a property through us, you get discounted pricing on properties at or below market value. Seller incentives like mortgage buy-down rates and credits right now usually lowers your rate by about 1%. And we know with higher interest rates right now, you definitely want that, right? And you get free ongoing customer service for the life of your investment. Get personal phone numbers and email addresses of our team. And build-to-rent properties are in prime growth markets. We're talking 18% internal rate of return. 18%. Amazing tax benefits. And you get a free cost segregation report, helping find strategies that increase tax write-offs. You get principal reduction as your tenant pays down your mortgage. And you get steadily growing appreciation and equity gains. Plus, positive cash flow. We won't sell you a property if the math doesn't add up. If you want to know more, just click the link in the description box and it'll take you to our website where you can book a free call with our team. There's zero pressure, no obligation. Look, I understand we won't be a good fit for everybody, and that's totally okay. Some of you might want to be DIY, you want to do it yourself. That's great. Either way, you're going to walk away from our phone call with some valuable new insights and an idea of what questions you might want to ask and some actionable steps that you can take to move forward in your financial journey. You can always find an excuse to not invest, but the sooner that you start a smart investment like build-to-rent real estate in a strong market, the sooner you'll be enjoying pure cash flow. So click the link below and I hope to see you on our schedule. Today is our Q&A episode though, and I would love to dive into some of our questions that we get from you. You can always leave us a voicemail question right on our website. Just go to morrisinvest.com. There you can leave us a voicemail question and I'll try to answer it here on the show. We are also a full-service rental company, so feel free to book a call with our team if you'd like. Okay, let's take our first question today here on the show.
Hey, Clayton, my question for you is I can't find a property that's priced well enough. I don't want to pay $400,000 for a property that's only worth $200,000 because of this price spike over the last year and a half or so. Live in Georgia, trying to figure out how to do it. I've got 3 realtors. They keep giving me all these overpriced properties. Trying to find a good outlet to invest. Any help would be greatly appreciated. Thank you.
Thank you. Okay, so I was wondering if you were going to get to that point about investing, because I was like, okay, are you talking about a place to live for yourself, or are you talking about a place to invest in? Let me just say this for the record here on the show, as I've said it many, many times. You should never, ever, ever, ever buy a property for more than the appraised value of the property. Okay? Never, ever, ever. Like the homes that we do at Morris Invest, the full service, built from the ground up, new construction properties that we sell to our clients, we build about 400 to 500 per year. So we have a very select group of individuals that are able to buy properties from us. And if you'd like to book a call with us, you can. We'd love to talk with you. Just go to our website. But you are not going to overpay for an investment property. And our property prices are in the 100 range up to 300 range, depending on the size. We have smaller properties, single families, duplexes, and we build new construction in A-class neighborhoods with the best school districts. Okay. We're in the best school districts in West Texas. And one of the things we're proud of when we sell one of our properties, because we build like 30 or 40 of them at a time, that's why we're able to do that, because we build in bulk. So we build multiple properties at the same time. We're able to buy multiple water heaters at the same time. Our construction crews know that they're working and they're not going to be laid off. So they're continuing to work on all of our properties. That's why we're able to get these savings onto our clients. And one of the things we're really proud of is when you buy the property, you're going to be, you get the appraisal, because you're going to also do this with financing. So we have over 100 different lenders that we work with. I think it's like 150 different lenders that we work with now, actually. And they're going to do their own appraisal before they're going to give you money. It's a bank, right? They're going to give you money, so they're going to do their own appraisal. But you can do your own appraisal as well. And the bank is not going to lend you more than the property's worth. So they're going to do their own appraisal. The appraisal will come in where it is, and you buy the property and close on the property, and it's not going to be more than the appraised value. And the beauty of some of our properties, because the property prices, property values continue to increase, very often a client might go under contract for one of our properties, and then, 45 days, 60 days later, when they're closing, now the property has already appreciated, or it's actually worth more when they do the appraisal than they thought they were buying it for. So they're actually getting built-in equity. So they're buying it at or below the appraised value. And when they close on it, they're already getting equity. Now, that's not on every property, and we can't guarantee that that's the case, but we can guarantee you'll never, ever buy one of our properties above the appraised value. And I just get so pissed off, like, that investment companies would try to prey on people like you, and they know they're doing it because they can get away with it, because people won't do their homework, and they will end up, the way that they get away with it is that they'll almost have their own, almost like their in-house bank. So like, you can use our lender. Oh, really? What's your lender? And it ends up being like their own bank that they've created to lend you money. And they're lending knowing that the appraised value is much, much lower. And so it's ridiculous. It's just absolutely ridiculous. My advice to you is make sure you get an appraised value on the property, get an appraisal, an independent appraisal. And like, if you work with our team, you're going to be working with, hundreds of different lenders, which they're banks, right? So we don't own them. We don't have nothing to do with them other than we've developed relationships with them. And they're going to send out their own third-party appraiser before they're ever going to give you money. And then you put down 25% and they're putting up the most of it, right? So they have the most to lose. So again, never, ever, ever pay above the appraised value on a property. And when you told me they want you to pay $400,000 for a house that's worth $200,000, are you kidding me? Are you kidding me? I'm getting pissed off today. Pissed off that people are taking advantage of you. I'm getting pissed off that our leaders in Washington, D.C. are lying to us. It's a damn shame. So, don't do that. All right, our next question.
Good day to you, Mr. Morris. I'm sorry that my English is not very good, but I will try to make it clear as much as I can. My name is Naisan. I'm 26 years old, married, have 2 kids. We live in Salt Lake City, Utah. The household income is about $180K. Of course, we pay taxes from that amount. And we have a mortgage. The balance is $250K that we need to pay. My question is, should we keep paying this mortgage till we pay it off? Or should we buy another house and then keep, pay for both of them, that we cannot do any extra payments if we have 2 houses, or if we buy a second house? If you can answer this question, I will be very happy. I'm young kinda, but I'm trying my best to do something for my 2 daughters. When they grow up, I want them to have a comfortable, happy life. And I support my whole family in the backcountry. Thank you so much for everything you do. We really appreciate you. Thank you again. Have a good day.
Well, thank you for the great question. And I'm very touched. You're doing what a man should do, is provide for his family. And, hope a lot of other young men watching this right now can look at that and say, there's a man. That's a man right there who's taking care of his 2 daughters and providing for his family and back in his country. Great for you. My other advice would be also to change that fire alarm. I hate those things. Don't you hate those things? Every 6 months, those damn batteries go out and they beep like that. I hate those things. And then you got to get up on a chair and so, anyway, I could hear it in the background there. Drives me nuts. And it's funny, my wife doesn't even really hear it. It could be going on for days and she doesn't even notice it. I'm like, don't you find that annoying? Anyway, nevertheless. So I have a couple of questions for you. You own a home. You make about $180K in the household per year, okay, and you owe about two something on it. Forgive me, but 260, I think you said, something like that, 260, 280. So obviously, you can pay that down pretty quickly if you follow my advice in my book that I've written, How to Pay Off Your Mortgage in 5 Years. It's a Amazon bestseller. Highly recommend it. Get the one with the blue cover. It's by me, Clayton Morris, and Natalie Morris. There's a couple of other like copycats, people that have published books similarly now, and I think they just stole our book basically. But anyway, if you want to get the best one, get the blue cover. That's the most recent edition with the most recent tax code updates. So check that out. We show you a strategy to really fire at the principal balance of the mortgage, and that should have that paid off really quickly if you're living there. So I can't give you financial advice to tell you to pay it off. That's totally up to you. That's what we did, and it works great. But this second home thing, I have a question about. What do you like? Is a second home for you as like a vacation home, or or is it an investment property? Because two different things here, right? So you're talking about providing for your daughters in the future, and if it's just a second home that you can go and enjoy a lake house by yourselves, and you don't, there's nothing. It's not a performing asset. Personally, I would say I would avoid second homes. Look, I've been there, and I'm here to tell you it's not all it's cracked up to be. And I'll never do it again, okay? The reason is that you have this idea, unless you're like Madonna or something, where you have people that fly there ahead of time and stock your refrigerator and get the house ready for you, turn on the heat, do all of those things and all of that, right? Where you don't care. You can go to Tuscany and Madonna's team is going to fly there ahead of time and take care of everything before her arrival. No, for most people, that's not the case. But most people get this idea in their head that they're going to get this second home where the whole family is going to go on the weekends. You're going to go and spend all this time up at the lake house or whatever you're going to do. And then pretty soon when the kids start getting a little bit older, they're like, I don't want to go up there because none of their friends are there, right? So your girls are going to be like, I don't want to go there, Dad. Like, none of my friends are there. I know it sounds nice. We're going to go. And you might do it for a few years while they're young. And it might seem, I'm telling you, then it becomes more of a pain. Then you're getting two of everything. You've got to, make sure that everything's, and then you're like, oh, okay, well, we'll just Airbnb it. And then you're like not in the best spot to do an Airbnb. And I know from experience, and I have a lot of friends that have done this, and they all regret it. So that's just my advice. Think long and hard about doing a second home that you're going to go and like spend time at. And unless you have a really solid plan, like you really know, okay, once the kids go to college, we're selling off this other house near their school. We're not going to even be in that neighborhood anymore, but we're going to go to the second home, and that's where we're going to spend our twilight years. Great. Okay. Again, have a really solid plan. Think it through before you pull the trigger on this. I'm telling you, it's not all it's cracked up to be. However, if you're buying this second home for an investment and you're not going to live there, that's a whole other ball of wax. And I highly recommend it. I highly recommend looking at how you can leverage maybe some of the equity in the home that you're currently living in. What do you have access to? A 401k, an IRA, some other vehicle, some other asset that you can pull together and maybe purchase an investment property. Like I said, our team would be happy to help you with that and point you in the right direction, whether we work with you or not. And we can figure out and help you unlock things that you might not have even thought about, things that you didn't really think you had access to. And we can look at all your financials and make a decision and talk you through it. And we might say at the end of the day, no, this is not a good fit for you. We do that a lot actually. Or yeah, this is a great fit and here's how it can work out for you to have a second home that's performing and it's producing cash flow every month. And it's also building up equity. It's also building up, you're building up your asset column for your daughters and your family. And it becomes like a cash flow vehicle for you. So I highly recommend that. But again, if it's second home that you're going to move into and it's not a performing asset, I would seriously think about that. So sorry I didn't have your answer there. I didn't know exactly what you intended to do with this second home question. But yes, read my book and then book a call with our team and we'll talk with you. We'll talk through the process. Just go to morrisinvest.com and book a call on the little calendar icon in our team. And they'll know. They'll be ready for you. So don't worry about it. And we'll talk with you then. All right, our next question.
This is Mary Chappelle, and I've been looking at real estate plans, how to invest for a while now, and I'm really serious about getting started with all the plans out, with all due respect, on how to invest in real estate. Why should I go with Morris Investments?
Great question, Mary. Thank you for the question. First of all, it's Morris Invest. It's not Morris Investments. I know some people like Google search that, but that's totally different. I don't even know what that is, to be honest. I think it's like some property management company in Ohio or something. So yes, it's just morrisinvest.com. Why should you go with us? Look, I never, ever, ever try to push anyone to work with us. Again, we build about 400 to 500 homes a year, depending on the size and scope of the projects we're working on. So we can't take on everybody. But if you say the people that work with us are usually professionals, they usually have a good amount of money in savings. They've got a 401k, they've got an IRA, they've got money to put a down payment on a property. They don't want a second job, because if you want to try to do this yourself and DIY it, it becomes a full-time job. Go out and try to find a great property that you're going to renovate from soup to nuts. Hire contractors, make sure that it's in the best school districts, make sure demographically it's in the best neighborhoods. Are you in a low crime, high crime area, best school districts? How are you going to make sure that you're able to get financing on the property? How are you going to find the best property management team to make sure that it cash flows and does background checks on the tenants, make sure a great tenant lives in the property, and where you can be hands off. See, as an investor, I want to be hands off. I don't ever want to think about my properties. So all of the properties I own, I don't think about them. I have property management teams that think about them. And every month, cash flow comes in. And Natalie and I sit down and we look at our portfolio every few months and we make decisions about, we have to pay taxes, of course, and we do quarterly taxes or whatever. We have to take care of those things, right? But I don't want to think about my properties. I don't want to deal with any of it. I want to make sure that as a tenant is coming up for renewal, that the property management team is handling it. They're either raising the rent or placing a new tenant in the property. They handle everything, right? So our team is hands-on, totally hands-on. They will do everything for you, everything. And like I mentioned to the earlier caller on the show, you're going to pay at or below market value to buy the property. So imagine having a brand new construction property in one of the best neighborhoods in West Texas, whether it's Lubbock, Texas, or Odessa, or Midland, the areas that we operate in, also in Missouri, outside of Joplin, Missouri, etc. And we're in the best school districts. So everyone wants to be in these school districts. And where we bought all of the land and where we're building our homes is a highly sought after area. Demographically, the job growth is tremendous. The crime is incredibly low. The diversity of jobs from healthcare industry to universities, all right there. So all of those factors, we'll spend about year to 2 years at least studying an area before we ever start breaking ground and acquiring properties and doing any of that. So we do all of that for you, all of that. And then on top of that, we're even able to, with our lenders, do buy downs right now on interest rates, with interest rate buy downs, credit options, because of the slightly higher interest rates right now. We're able to do that. So there's so many reasons. I mean, I can, make a million reasons. But also, we're going to get on the phone with you and see if you're a fit for us, right? I mean, you might not be a good fit for us at all. You might want to be the person that's hands-on and wants to be the one that's the weekend warrior and fixes a property up and finds a property, hires contractors and micromanages things and does drywall repair. And you know what I mean? Like, if that's you, then what we do is not going to be a good fit for you at all. For our process, we kind of really cater to like busy people, right? Busy people that want to invest their money wisely. And the other thing is you're going to own the property 100%. So you will own the property 100%. We are not involved in it. We don't own anything. You buy the property, you own it. You could turn around the next day and sell it if you want to. It's totally up to you. So other companies will make you a partner on an LLC. So you'll like co-own it with them and they'll charge you more than market value, as you heard from our first caller tonight. So again, I don't know, that's why you'd work with us. We try to be the best. Our customer service is the best in the business, hands down. No one even comes close to that. So I think that's why you'd want to work with us. But again, you do you, totally up to you. But if you're interested, book a call with our team, go to morrisinvest.com and do that. And also right there's a microphone icon on the right side of your screen. Please leave us a voicemail question and ask any question you want here on the show, and we will try to answer it. Thanks, everyone. We'll see you next time.